Good morning, traders, and welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders where we are focused on the ES, the NQ, and how they move through the two-way auction process. What on earth do you mean, Charles? The two-way auction process? That is essentially looking at the market as competition between buyers and sellers, much like an art auction, right? An art auction is a one-way auction where the more people that put their hand up in the air when the auctioneer lists a price level, the more likely that price level is to keep going up until there's no hands left to go up in the air, right? Well, the stock market does the same thing. As long as there are buyers, it keeps going up. As long as there are sellers, it keeps going down. So our job is to recognize, where does this auction change? Where do buyers become sellers? Where do sellers become buyers? Where do new buyers start to step in? Where do new sellers start to step in? So what I'm going to do this morning is I'm going to walk you through where the market is, between now and 9:30, and all the different scenarios for how things can play out. And today is actually kind of a good one from a learning perspective, because really anything can happen. We are at a position right now where I could make an equal argument that the market is going to go sideways all day, an equal argument that the market is going to turn around and start heading back up for the all-time highs, or an equal argument that the market is going to head lower for, 68.41 today. And they're all equal arguments. It's about a 33% chance that any of those things could happen. And it might feel like that's not helpful. You might be thinking, Charles, we came here so you would tell us what the market is going to do today. Telling us it could do anything is not helpful, but I'm going to explain to you how it can be. Because to execute trades in a profitable manner consistently in the market, you need to be able to predict what is going to happen before it gets there, before the market does whatever the thing is that's going to make it do whatever it's going to do. You have to be able to predict it ahead of time. And you have to know what to look for to tell you if your prediction is right or wrong. Because anything other than that, you're just gambling. You're just guessing, right? But if you can get good at predicting what will happen and good at recognizing the signs from the market, what we call market-generated information, that confirms that you are right, then you can execute a trade. And you can get better and better at that. You can get better and better over time at recognizing the potential opportunities and then executing trades based on the market-generated information. That is a skill you can improve on no matter what the market does. No matter what kind of day it has, whether it's a large range or a small range, whether it's a trend day or a balance day, whether there's a bunch of fake outs on both ends of the range where they sweep the order books and they come back in, no matter what the market does, if you know what to look for, then you have an edge. And all you have to do is get better and better at using that edge effectively. So let me walk you through how I see the market this morning and the various scenarios and how they could play out. And then I want you to pay attention throughout the day today to which of these scenarios play out. If you see the things that I'm discussing happen, does what I said would happen take place next or not? Right? And that's where your edge is in your trading. So to start off, let's zoom out just a little bit and give ourselves sort of a context for what the market is doing right now, bigger picture. So I'm going to actually just very quickly zoom all the way out on the monthly chart. And we're going to take a look at what the market is doing on a monthly time frame. Why? Because we just started a new month, right? We're now in November. So we want to say what's been happening all the months prior to this in order to give us an idea of what could happen this month. Well, it's not rocket science. We have been trending higher on the monthly time frame since May of this year. We have just been going higher and higher and higher and higher every single month. Every single month has had a higher high and a higher low. And we just keep going. As long as the last month had a higher high and higher low, so does the next month. As long as the month before that had a higher high and higher low, so does the next month. So what should we be saying right now when looking at the monthly chart? That it could just keep going up, that we can make new all-time highs this month. Now, that doesn't mean we will for sure, but that's a context we want to carry forward, that this market has momentum on the monthly basis. And so that momentum absolutely can continue. Now, you might be thinking, but Charles, if you zoom out, you look to see that we don't often go, straight up for that many months. We maybe go for 6 to 8 months, and then eventually we need to pull back. We need to cool off. That is true. But until we see a lower high on the monthly, we should assume it can keep going up. We will be better positioned as traders if we assume the momentum will continue, because that is what the market generated information right now anyway is telling us. Okay? Let's zoom in and let's take a look at the weekly. So on the weekly, we can see that yes, over the last few months, the market has been working its way higher, but it's been spending a lot of time going sideways to get there. Now, it has not been doing a lot of big dips, but it has been spending a lot of time going sideways. That is the way it is able to build up the momentum to continue. It just goes sideways for so long that the people that are shorting get frustrated and give up on their shorts. And then the people that aren't long chase price. They FOMO in because they aren't long. And then you get another move higher and another move higher. And that's still going. However, if we look at last week's weekly candle, what do we see? It's a spinning top, right? We got a very large wick at the high. So that's our first warning sign. Right now, we still have momentum. It had higher highs. It had higher lows. So it is still one time framing higher on the weekly. And if we stay above last week's low this week, there's no reason to assume we won't keep one time framing higher. We won't make new all-time highs this week. We absolutely can. But we have a little warning sign in that weekly candle telling us, ooh, things are running out of steam. We may need to go sideways a little bit. So if you look at, here you had some momentum, then you had that spinning top and you went sideways the next week. Now you did make higher highs and higher lows, and you did keep that momentum going afterward, but you slowed down quite a bit there, didn't you? Look at this one, another spinning top on the weekly, and again, sideways the next week. You stayed inside that week's range. You didn't do anything exciting, but things slowed down quite a bit. Here you go again, right? Things slowed down for several weeks. The market went sideways. Here you go again. Things slowed down the next week. You did make higher highs and higher lows, but not the same kind of range that you had the weeks prior. So getting a signal like that is telling us this market is kind of running out of steam. Is that bearish? Absolutely not. It is just a reason to be slightly less bullish. It is a reason to be a little bit cautious. Okay. Now let's zoom in and we'll take a look at the daily. When we look at the daily, we can see, what did we do last week? We just bounced. We just went sideways. And even though we are one time framing lower, right? Lower highs, lower lows. We are one time framing lower. We're really just going sideways. We really just have a sideways range. You can see from the shape of the candles, these are all spinning tops in here. Okay. Well, that's this week. But these are all spinning tops. So the market is going sideways. So, okay, let's zoom in even more with the market profile chart and see if we can pick up on any nuances that we might be missing looking at the candlesticks. That's why we use market profile, because it gives us information that candlesticks don't. It can be very confusing. For example, if you look at Thursday's range, okay, this is Thursday's range. So this right here is the regular trading hours from Thursday. If you look at that on the candlestick, what does it look like? It looks super bearish. It's a giant, big, red candlestick that closed at the lows. Oh my God, that's so bearish, right? That would make you think this market is going much lower. But when you look at it in the market profile, there's nuances that you can pick up on that help you to realize that it really wasn't that bearish. What are those nuances? Look at the shape of the profile. A majority of the time and a majority of the volume that day was in the upper end of the range. So yeah, the market sold off, and that can always happen. That's how we find out if the market is going to keep going up or down, right? When the market is going sideways, somebody's got to bid or ask to push it to a new level, right? Somebody's got to be willing to push it somewhere new. And it's what happens when we get there that tells us if it's going to keep going or not. So they pushed it down. They went sideways all day long and they pushed it down. But what do we see in the profile on the lower end of that range? We see very little volume. The volume is visible by the color of these candles on the volume profile here. So the red is the top 30% of volume. The pink is the middle 40%, and the white is the lowest 30% of volume. Okay. And so what do we see down here in the lower end of Thursday's range? It's a lot of white, a little bit of pink here and there, but it's a lot of white. So we brought in very little volume as we pushed down, meaning there were not a lot of people that wanted to sell. As a matter of fact, as we pushed down, people wanted to buy, not sell. That's not bearish. The candlestick looked bearish, but the market profile showed us that this really isn't that bearish. So the overnight brought it right back up and went sideways again, which is as to be expected because of the amount of time and the amount of volume that we spent in the upper end of that range. If you have market profile, you have that nuance to understand that difference. Okay. So when we start looking at the way that the market moved last week, what do we see? The last 3 days, Wednesday, Thursday, and Friday, were all that type of profile. All of these profiles, a majority of the time and volume was in the upper end of the range. In all three of these profiles, when the market sold off, it V-shape recovered right out of it. Every single time. The market tried to go lower and they brought it right back up, and it tried to go lower and they brought it right back up, and it tried to go lower and they brought it right back up. So what's happening here? Somebody is buying these dips, right? Somebody is saying, I'm bullish. I think this thing is going to all-time highs again. And they are buying every time the market goes on sale. These are discount shoppers. These are not buyers that want to pay full price for the market. They want to get it on sale. They want to get a good deal. So they're waiting for the market to have this big sell-off, and then they're coming in and they're buying it up. And then they get another big sell-off and they're not worried. They buy it up. It's another sale. It's another great deal. And it dips again and they buy it up again. So what should we be assuming right now on Monday morning? If this is what's been happening the last 3 days, probably it's going to keep happening, right? It's been going like this up till now, until we get new information from the market that tells us that we're not going to V-shape and reverse right back up. We should assume it will. So that's our edge. That's our edge right now, is recognizing the behavior of the market up till now and knowing what it will look like if that behavior changes. Now, we've been in a negative gamma environment, which means we've been in it since Wednesday of last week, which means we're just going to have much larger ranges. So you got to accept that when we're talking about what the market could do, we're going to be talking about much bigger moves. Okay, we're going to be talking about much larger ranges, but the concepts are always the same. So this is going to sound crazy to you guys, but I could see the market today sell off all the way back down to yesterday's low, to Friday's low, and I still wouldn't think it's bearish. Now, obviously, as a day trader, I'd be willing to short and make money on the way down. I'm not against that, and we'll talk about how you do that in a second, but as a longer term trader, as a swing trader, what should I assume is going to happen if we sell off below yesterday's low? That we're going to V-shape reverse right back out like we have the last 3 days. Okay? That's what I should be assuming. So the only thing that gets me bearish as a swing trader right now is if we do sell off below yesterday's low and then we stay down there. And then we spend time and we bring in volume and we bring the value area down. And I see a lot of new selling down there. Then I become bearish, because that would be a change in the market behavior, which is what we're always looking for. We're looking for changes in the market behavior. Well, what if the market today were to start to go up? I should expect that it could go all the way up to new all-time highs. If not today, in the next few days. Why? Because somebody's been buying the dips. And as of right now, where the market is opening, just think about it like this. Assume that they started buying in here on Wednesday, they started buying in here on Thursday, and they started buying in here on Friday. Look at where the market is set to open right now. Almost all those buyers are in the green. They're profitable right now. They're feeling great. So are they going to feel a need to lock in profits right away? Oh my God, I have to take profits. No, they're not. These are swing traders that are buying this low, and they're not going to take profits until we start to make all-time highs. So if the market starts to go up today and it starts to gain momentum, I can get really bullish really quick, because the market is going to continue higher, because these strong hand swing traders are going to step in. So let me walk through what I think are the 3 scenarios that could happen today and how I would trade them. So first and foremost, I would say in the upper end of yesterday's range, this is what we're going to call a chop zone. This is basically an area where the market is just going to play tug of war, right? There'll be buyers, there'll be sellers. Everybody has a different opinion. Some people are seeing that the market is one time framing lower. Some people are seeing that the market is one time framing lower. They see that we didn't quite fill the gap. So that's a massive, huge magnet right now pulling on price at the low, and they're shorting this morning. And some people are seeing that we had those 3 V-shaped reversals last week, and they're saying to themselves, this market's going higher, and they're going long. So while the 2 of them, those sellers trying to get this gap fill and those buyers trying to get continuation to the all-time high, as they enter their trades in, let's call it the first hour to 2 hours of the day today, there's going to be a lot of sideways. There's going to be a lot of chop. It's going to go up, and then it's going to go down, and then it's going to go up, and then it's going to go down. And we know because we're in a negative gamma environment, these are going to be large ranges. So these moves are going to feel very extreme, but we have a chop zone. So inside this chop zone, we're not going to do anything. We're just going to let them go up and down and up and down and up and down. We're going to let them do their thing. Now, if they get above this chop zone, which we will just call Friday's high, which we're set to open above right now, but we still got 12 minutes till the open. I have a feeling we'll be back inside Friday's range. Above Friday's high, we can start to get bullish. And if they turn that area into support, they start this morning, they start bringing in new buyers up there, we can be bullish as day traders and swing traders for continuation to the upside. The first target is the overnight high at 69.08. The next target is the daily high at 69.14. And then the overnight high above that from Thursday night at 69, we'll call it 18. Okay. So we get support above Friday's high. We go long. We got multiple areas as day traders to take profits. If we want to take profits, we could also stay in the trade and just monitor for continuation and see how far it goes, because it might today go to new all-time highs. That's very possible. So we can stay in it if we want to stay in it, or we can lock in profits if we want to lock in profits, right? As swing traders, it's the same story. If we start to see new buying, if we start to see support at yesterday's high, we got to recognize we missed the dip. It was last week. And so we want to get long as quickly as possible. And again, stay in for those all-time highs. Now, am I guaranteeing that we're going to make new all-time highs today? No, of course not. I'm not guaranteeing that. We'll have to wait and see. We'll have to see what the market does. We may get above Thursday's high and run out of steam and come back down, for all I know. But I'm just saying it's possible. So in the realm of possible, if you're going to take a trade, you want to be targeting those all-time highs. Okay? All right, so now let's say the market pushes up there and it can't stay up there. It can't bring in support. It can't keep going. And it comes back down into the chop zone, right? It pushes up and it just comes right back down in. Well, that tells us the market needs more chop. It tells us it's going to keep doing what it's been doing on the afternoon on Friday and all weekend long. It's just going to keep going sideways in this range. So if we want, as very, very short-term traders, can short that look above and fail and look to take profits somewhere inside the range. Or we could do nothing and just say, listen, they're going to chop around in here. I don't want to mess with this. Okay. So that's support above we buy for continuation. A look above and fail, we have the option to short or not, depending on how confident we feel in the intraday moves. Keeping in mind, in a negative gamma environment, they're likely to be bigger moves. Okay. Now, let's say we start to push down below this chop zone low, which actually I'll redraw this to get a little more specific here. I would actually call it 69. So 68, 69, that's our chop zone low. So if we were to push down this morning and we were to get below that chop zone low and we were to start to get new selling, we were to start to get resistance down there, what would that tell us? The market needs to come back for this gap. You have to understand, the market reversing 2 points above a gap like that is extremely unusual. Okay? And so that is a very strong magnet right now. The market really wants to come back and fill that gap. It desperately does. So if we start to get new selling below 68, 69 this morning, if we start to see resistance, we should absolutely assume the market is going to head down there and fill that gap. So as day traders, that's a great trade. to get short there and look to take profits on the gap fill. Now, we are not going to fall in love with that trade. We are not going to assume the market is going to keep going. Why? Because that's the discount shopper's place to step in. Discount shoppers, those stronger hand, longer term traders, they love to buy a gap fill, especially one that's been sitting there for a week unfilled. They love it. And they've been buying the last 3 days on every single dip. So we should assume that if we do get down there and fill that gap today, they're going to step in somewhere in the upper end of the range from 1024. Okay. They're going to step in there and start buying. So we can, as shorter term traders, we can short resistance below 69 and target a gap fill, but we want to lock in profits there. Now, if we get back down into the range from 1024 and we start to spend time and bring in more volume there, then we can talk about the next move to the downside, which likely would be a very large move, not intraday today, but in the days ahead. But that's not what I think is going to happen. I think if we fill that gap, boop, 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 they're going to liquidate a little bit and then come right back up. Okay, so that's the next thing to think about. Now, let's say we get to that chop zone low, we get to 68.69, and we don't get that new selling. The market turns around and comes back up. Well, once again, we can go long in there, targeting move back up into the range because we're assuming we're going to keep going sideways. So that's your edge, guys. Your edge isn't being able to know today, is the market going to go up, down, or sideways? It's in knowing where is the best place to both recognize changes in the auction. New buying above here is bullish. New selling below is bearish. A lack of at either of those places means more sideways. And then having the discipline to wait until you get there to execute trades. So then you say to me, all right, well, Charles, what if we're in the middle of this range and the market is chopping around? What do I do then? That's where Bookmap comes in. That's where Bookmap shines like a shiny diamond. Okay? Because then we're going to be watching the stops and icebergs. Are there large stops that get taken out on the way up? And if they do, if the market pokes up and it takes out a large stop, let's say 100 plus contracts, and then it pokes up again and it doesn't take out a stop, it's probably going to reverse and come back down. Now, these are very, very quick, sort of like scalp trade timeframes, but that's what would happen, right? And then vice versa. If the market is going down and it takes out a huge set of stops and then it pokes back up and it doesn't take out more stops, it's probably going to turn around and come back down. We can actually see that playing out right now. So you see right here, the market poked up, took out 191 stops, poked up again, didn't take out stops. What did it do? Come back down. So as I said, these are more for really quick, scalp type of trades, but that's the only way you can trade inside the chop zone, or with those very quick scalp trades where you're looking for a 3-point, 5-point, 8-point move and you lock in those profits very, very quickly. The better opportunity, if you're a day trader or a swing trader, is on the look above and fail, look below and fail, or look above and go, look below and go trades. That's the better opportunity. Okay. Now, take everything I just said, put that aside in your brain. I'm going to now add one more thing because this happened after I started talking. Now we are set to open with a gap up. Okay. So basically we already broke out of the chop zone. It's as if we broke out of the chop zone high, which is Friday's high, and we're already testing it right at the market open. So when the market opens this morning, because it looks like we're now going to open with a gap up, there's a high probability we will fill the gap, meaning the market will come back down to 69.02. We've got a weak reference at 6,900. So that has a pretty high probability of getting backfilled as well. But once we repair that weak reference, if the market pokes in here and then it starts to find support and come back up, that is the scenario we talked about with the breakout of the chop zone, right? It's the same thing. In this scenario, we have a different term for it, which is gap fill and go, but it's the same principle. It's the same idea. If we turn Friday's high into support, that is a sign of those new buyers getting in, chasing price. And that means you're not going to get another dip. The dips were last week and you missed it. And so now everybody's got to start to chase, and that will create momentum to the upside. There is also a potential that we could open with a gap and not fill the gap at all, and we could immediately start to push higher. That's what we call a gap and go. I don't think that is as likely today. I think I'm relatively confident we will dip into yesterday's range at least once. But if we do open and immediately start to trade higher, if you want to get long, you don't want to wait around, because a gap and go is a sign of momentum, and the market can just immediately start to push higher and never come back down again. So I hope that gives you edge. I hope you understand what I just said. If you don't, if any of that was confusing and you're like, Charles, I'm so confused, then hit me up in the chat. If you are watching on YouTube, just leave your questions or comments in the chat. And if you are watching through the Discord, head to the Futures-Charles tab and let me know your question there. We got Trey Eater in the Discord. Good morning to you. Steven is here. Steven says, this year has gone by quick. It has. This year has flown by. I blame Trump. It's the constant news cycle of like every day there's some crazy new thing happening. It makes us lose track of how time works. Good morning to Willie T. J, who says, Pirates, it's going to be a great week in the trading paradise at the big casino. Laura is here. Good morning to you. Guillermo in the house. Bill K, Will, Sook, Trevor, Percy, Arjit. Thank you, Guillermo. Appreciate you. Pete the Cat in the house. Good morning to you. And Al, welcome, welcome. So like I said, any questions, comments, concerns, criticisms, let me know in the chat. And if you've got nothing to say, if I'm doing such a good job that you have no questions, smash that thumbs up button. Give me that like. I got an ego that needs to be stroked here. Let's get that like button going. But definitely still ask questions. Let's take a quick look at the NQ. We got 1 minute till the market opens, but we'll just take a look at that. I have a feeling it'll just do the same thing as the ES. Yeah, okay. So yeah, NQ, it is not one time framing lower. So it is not bearish like the ES in that way. It is in balance. You also have a gap up, so it's the same story as the ES. You fill the gap coming back down to 26,200. You look for support there. If you get support anywhere above, we'll call it 26,165. That is bullish for a gap fill and go. And then the target becomes the overnight high at 26,262. Okay. So gap fill is the first order of business for the market. And if they can turn the upper end of yesterday's range into support, we look for continuation higher. If they can't, your chop zone is between Friday's high, 26,200, and the overnight low, 26,014. Okay, so it's a 200-point chop zone, but that's your chop zone for the NQ if we pull back in. Okay, so as we said, first order business is fill the gap. The market is doing just that. It did leave behind a weak high because it reversed right at the overnight high. So the next question is, can we turn this area in the upper end of yesterday's range into support? I will mark some support levels here and we will look for a bounce. Okay, so that's the gap fill. Same thing as we talked about before with the chop zone high. This is the area where the market decides, do we have buyers here? Do people start to hit the bid? If people start to buy here, then the market will turn around and head back up for that overnight high. If the market does not bring in buyers here, we're going to be stuck going sideways for the next few hours. So this is the moment of truth for the buyers. Can they get back above yesterday's high and stay above it? We haven't taken out any large stops yet, so I suspect we need another poke into yesterday's range. We'd like to see a big order of stops taken out near the low. That would give us some confidence. And you say, Charles, taking out buyers gives you confidence the market is going to go up? Yes, sir. Because this market loves to sweep the order books first, then make its move. And that's what Bookmap shows us when they sweep that order book. If you're wondering what it looks like when they sweep the order book, you will either see one of these little dots with a number next to it. That's the stops, setting, pointing it out. You can also see when there is a large set of, a large volume dot, which is showing the delta between buyers and sellers. So if the market comes down and the large dot at the low is red, then you know they just took out buyers. If it's green, that's just new buyers stepping in. But if it's red, that was a sweep of the order books, and they'll turn around and come back up. For example, this one here, not this one, because that was red, so that was just sellers stepping in. But this one up here, if a majority of the traders were long, which is what makes it green, and it's a huge imbalance, which makes it a big dot as opposed to a little one, but then the market came down, how is that possible? If a bunch of people went long right there, how is that possible? Well, they were stops. They were sellers. They got stopped out real quick. And so there was no new buyers to keep it going. Moment of truth for these buyers. They got to step in and defend right now, or we're going sideways for hours. Okay, there you go. You see that? That 31 right there? That's a long. Somebody who was long the market. 31 contracts, and they just got taken out. So now the market's going to poke down once more to see if there's more stops they can take out. If they can't, this thing will reverse and come back up. If they can, it's just going to keep going down. Okay, so you see how they keep taking out more stops with each poke? 31 there, 67 there, 22 there. They just took out another 4 right there. So this tells us they're going to keep pushing down. So now our question is, this has become, a look above and fail of the chop zone high. Now the question is, do we start to get resistance? As we push up, do sellers start to pile on in here, creating resistance? If they do, it's going to be a sideways day, and the first move will be down. If there's no resistance and we're able to get back above yesterday's high, we are bullish as can be. So I would describe myself as 100% neutral right now, watching for resistance. If there's none, I get bullish real quick. Now I can mark some potential support levels for bounces, but remember, in a chop zone, it's very, very hard to predict exact levels where the market will reverse. Right now, we keep taking out more stops, so we're going to keep going down until we've magically taken out all the stops there is to take out. And we haven't done it yet. Look, we just took out another 300. So it's hard to know exactly where that will be, but I will mark some potential levels here. These would be levels to take profits on shorts, not enter longs. The Green Hornet Bull says NVIDIA is moving up on news. Well, I bet you it's going to flip in reverse if the market keeps selling off. I assume the Q is also back inside yesterday's range. Yeah. So same thing for the NQ. Now that you're inside Friday's range, pretty much right here, right now, if they can turn this into support between 26,170 and 26,160. If they can turn this area into support, they'll bounce up out of here, and that'll be a gap fill and go, which would be bullish. But the more time and the more volume they bring in inside Friday's range, the more likely they are to keep selling off. And the next major support to the downside I see is 26,110. So where NQ goes, NVIDIA will likely follow once it's cooled off a little bit. So you see how this is working? They come down and they take out stops. We can see that because of Bookmap, because that stops indicator. And so we say, okay, they're going to poke lower because they were able to take out stops. Now, if they weren't able to take out any more stops, we'd expect it to reverse and come back up. But if they are, what's it going to do? It's going to poke lower again. And same thing, if the next poke, it can't take out stops, it'll turn around and come back up. But if it can, what's it going to do? It's going to poke down again. Well, there you go. We just keep taking out more and more stops. So they're just going to keep poking down. Traders will do what works until it doesn't. So now is where we're saying, do we start to run out of stops to squeeze? If so, we expect the reversal. If not, we look for the next move to the downside. And you say, Charles, it's moving so far, so fast. Yeah, we said it's a negative gamma environment. It's going to be big moves. That's what we get in negative gamma. So we don't be surprised. We be prepared. Mohammed says, Mohammed here, all the way from South Africa. Welcome, Mohammed. Sook says, it's more likely to liquidate the overnight long first to go up? Question mark. No, it did liquidate the overnight longs, and that's to go down. And that's what it's doing. That's what those stops are. It's all those traders from the overnight that kept buying and buying and buying. We closed down here on Friday. This is where we closed. So when we opened up here, that inventory was net long. And so as soon as, if we'd have turned Friday's high into support, they would have stayed long and the market would have kept going up. But the fact that we could not turn that into support meant one by one, they're getting squeezed. Every tick the market goes lower, more and more of them are changing their minds and saying, get me out of this long trade. Because it doesn't matter where they got long, whether they bought down here, or they bought here, or they bought here, or they bought here. Every tick it goes lower, they're all losing money. So they all get out at the same time and you get a very fast move. And you say, Charles, why didn't you tell us that was going to happen before the market opened? Well, because I didn't know. Because you never know. If they'd have turned yesterday's high into support, we wouldn't have gotten this liquidation. We wouldn't be moving lower right now. But the lack of support, that's what told us. Okay, so it looks like the market is trying to bounce here. Let's take a quick look at the ticks. The ticks are right at the zero line. So where they go from here will give us an idea of whether new sellers are piling on for the next move to the downside or this thing is ready to reverse and come back up. And right now it's saying new sellers, which is bearish. I'm also seeing that we're losing a little bit of liquidity here. So there's likely a news dump coming out in 1 minute. Remember, when the news happens, see, we took out more stops, more buyers. So this thing's going to keep poking down because it's still working. They're still squeezing longs. Remember that when those news, those news moments come where the liquidity goes dark like this, you can see all this liquidity here disappeared. That means there's news coming and you get volatility. Ignore that volatility. Don't worry about it. Wait until the liquidity comes back. Wait until it looks like this again. Then you can look for support or resistance because the volatility is just a reaction to the news. That's a whole set of bots that's all they do is they trade the news and they don't matter as soon as those bots are done executing. So we got to wait for the liquidity to return before we can trust support or resistance. Tom says there's no like button in the Discord, so I'll log into the YouTube just to give it to you here. Brother, I love to see it. Thank you very much. Appreciate the like. Look at that. Another 52 stops at the low, which means we're not done with the downside yet. Each poke takes out more buyers. Thank you, the demo trader. He says, smash the like button, peeps. Bow, 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 bow. Jason says, Charles, are weak references on the market profile repaired in the early or after hours? No. So to me, they only count as repaired if it happens during the regular trading hours between 9:30 a.m. and 4 p.m. Now, the market will often move to weak references in the overnight or the pre-market, post-market hours, and maybe not come back. But that doesn't change. That doesn't mean it's because they repaired the weak reference. That's just coincidence. So, for example, somebody emailed me this weekend about the highs from yesterday. And they were like, the D and the M period were both weak, correct? And I wrote them back and I said, yes. There's a very high probability we're coming back to that area around yesterday's high because we had so many weak references there, which meant there were so many stops there. And we actually came to it in the overnight. But let's say the overnight had poked up there and then come back down and we'd opened in here. Those would still be a target. They would still be weak. Now they're not because we opened above them. So they're gone. But if we'd, opened below them, they would still be there even if the overnight passed through them. Even if it passed through it 1 minute before the market opened, they would still be weak. Because, a lot of times as futures traders, we become obsessed with the futures market and we think the futures market is everything, but it's not. The stock market is a major, major influence on the futures market. Okay. So that's not just like the SPY and the VOO. It's also the individual stocks of those 500 companies. And although nowadays some brokerages are letting you trade certain stocks pre-market and stuff like that, as a majority of the stocks, they cannot be traded until the regular trading hours. So, if the market's going to make a move because an individual stock needs to be bought or sold, you got to wait for 9:30 a.m. for that to happen. So that will likely change in the future. I think they're going to end up making the stock market a 24-hour market eventually. And so then that transition between overnight and regular trading hours won't matter. But as of now, it still does. Absolutely. K2R, appreciate you. Mackie Mac says, what does the E mean before the number on the chart? Why does it show and not show? So there's two different things that this particular plugin shows you. It's called the stops and icebergs. Let me zoom way in just to show you. So when you see the two little triangles, that means it's an iceberg order. Okay. And obviously if it's red, it's an iceberg selling. If it's green, it's an iceberg buying. Okay. When you see the E, that means it fully executed. So whatever was the total number of contracts that trader or probably computer wanted to execute at that level, it was able to fully execute. If it has the C next to it, it means they canceled it. So in this case here, this bot wanted to get 123 contracts long, and it did. So then it was done. It was gone. But up here, this one wanted to get more than 41 contracts, but the market just kept going higher. So they canceled. They just turned it off. They pulled the rest of their contracts at that point. So that's the difference between the E and the C. Honestly, unless you're a scalper, you probably don't need to obsess about that. The way as a longer term day trader and swing trader, the way I think about icebergs is just, it tells me when it's bots doing it, as compared to when it's not. So if you look on the way down, there's not a lot of icebergs, right? But if you look right here, there's a ton of icebergs. What's the difference? These were news bots. They were reacting to the news and they were trading based off of that. These are just a certain set of high frequency bots. This is what they do. Okay. So that was just them doing their thing. So who cares? Unless you're trying to take scalp trades in that exact moment, to grab a point here or 2 points there or whatever, you don't need to worry about that. That was just some bot shenanigans. It lasted for about 5 minutes and now it's over. And we're back to regular market traders. And right now, what's happening? We're still taking out stops. So we're going to keep poking down until we've taken them all out. I have a feeling we're very, very close to the reversal here. Remember, our chop zone low is 68.69. That's where we expect buyers to come in and reverse it back up. So right now, this is the moment we should start to see those stops get smaller and smaller, and we should start seeing the ticks pumping up if price reverses. Haven't made the low yet, but I suspect we're about to. Jalman says the accent. Ha 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 ha. Yeah, my apologies to any of the South Africans if you're offended by me going into my African. Okay, so what are we noticing about the behavior right now? Tempo is slowing down. Suddenly we're getting less and less stops and icebergs. Look at how much cleaner the last couple of minutes have been to the ones prior. This market is fishing for a low right now. Haven't found it yet, but they're fishing for it. You know, any of these overnight longs that got in after the market closed on Friday, they're all squeezed now. So it's going to take new sellers intraday today to choose to get short to keep this market going much lower. And they can. I'm not saying they can't, but I'm just saying this is a great place, somewhere above 69, to flip and reverse. So what do we say? If they poke down and take out stops, they're going to poke again. If they can't take out any stops on the next poke, that's where they'll reverse. So we want to see, if we're a bear, we want to see another set of stops get taken out down here. Otherwise, this thing is going to slowly turn around and start heading the opposite direction. Large volume dots are green, shows us buyers are getting in at market right now. More buyers getting into market. Let's take a look at the ticks. So from here, if the ticks can stay above the 0 line, we're likely to turn around and start heading back up, looking for resistance around 83. If the ticks smash back down below the 0 line, we need another poke to the downside. Okay, ticks are back below 0. We need one more poke to the downside. And Bookmap's going dark. We got more news at 10 a.m. Ooh, we're at the chop zone low, right when the news comes out. You know the conspiracy theorist in me is loving that. It's a great way to sweep the order books and then reverse real quick. Listen, have you been enjoying this commentary in any way, shape, or form? It only costs $20 a month to have this every day. I live stream for the first hour of the day, every day, Monday to Friday, in the Pirate Traders Brigade. There's a link at the top of the screen. It's just piratetraders.io/join. And we'd love to have you. It costs $20. At some point in a month, I'm going to give you a piece of information that's going to help you to take a trade where you can make $20, or maybe stop you from getting in a trade where you would lose $20. This membership will absolutely pay for itself. And on top of my calls, you get the education. If you're willing to talk to me in the chat, you can get one-on-one coaching. It's all inclusive if you just join the Pirate Traders Brigade. So if you have not joined, you might consider giving it a try. piratetraders.io/join. We would love to have you. Pare says, how do you know these are stops? So Bookmap, I don't know how their algorithm works, but they have created an algorithm that basically analyzes the information in real time and tells you when there's stops. So you can program your settings to whatever you want. I can show you my settings for the stops and icebergs. Not like that, like that. So for the stops. I've got my aggregated threshold at 10. So that just means, it's got to be larger number of stops. I don't really care if one contract gets stopped out, it's got to be like 10 or more get stopped out for it to even show it to me. But that's what it's going to show is when you see that little circle and you see, 158, see the number next to it, those are stops. And if it's red, those were buyers that got stopped out. And if it's green, those are sellers that got stopped out. So we're having the news dump right now. Then we got the news bots, beep, boop, beep, boop, coming in here. And what did they just do? They poked down and took out a long for 40 contracts. And they poked up and took out a short for 39. Sons of guns. They did it in 2 seconds. But that's because the order book is so thin. It's easy to move around. When you see this get dark, just don't trust anything the market is doing. That's just a set of bots that are programmed to function in that, environment where there's no liquidity, and they do what they do. So we're right at the chop zone low right now, which is 69. This is the area where the market should flip in reverse if we're going to go sideways today. Isn't it funny that right when we get to this area, there's a news dump that allows the market to make big, fast moves up and down, sweeping the order books on both sides right before we test the chop zone low. Right? What bots got to do with it? What bots and how they control the market. This is probably the worst moment ever to end the live stream. Because right now is the moment of truth. If the market reverses here, and it turns around and it gets back above the current B period high, it gets back above 68.78, we're probably going sideways for the next few hours. But if the market pokes down and starts to get new selling below 69, we're probably heading down, maybe for the rest of the day. Certainly to 68.59 and then yesterday's low and then the gap fill. So this is a really pivotal moment to carry forward for the rest of the day. And it's right when this live stream comes to an end. Oh no, say it ain't so. I'll stick with you for another 2 minutes just to see which way this breaks. So if you look down here at the sub chart, whenever you see this right here, where suddenly the icebergs start to spike up, and then, they start to move down, and then the stops were going down, and then they start to move up. This is a pivotal change in the market. This is where something is switching. Something is changing. The bots are adjusting, and the stops are getting squeezed on both sides. So this is an important moment where, for example, if you're at a chop zone low and you're looking to turn around and start going sideways, this is a sign that it might be happening. Okay. So I would say, to me right now at this moment, this reads like we're about to reverse and start heading back up. So you could keep it as simple as saying bullish above the current low, 68.70, bearish below it, right? What you really want to see to be bearish is you want to see it get below there and then get new resistance. If you do, the first target is 68.59. The next target is the gap fill, 68.41. Okay. You're remembering longer term, every time the market has dipped the last few days, buyers have stepped in and bought that dip. So you don't necessarily want to be short beyond the gap fill unless you get new selling down there. Right. But that is only if we get below 68.70 and get new selling. For now, at this moment, what I assume is going to happen is we're going to start going sideways. And we have to just wait until we break out of that zone. Getting above yesterday's high, or like I said, getting below 70, the current low. That'll give you your bias moving forward. In between those two, chop, chop, chop. It's going to go. With that, I will say goodbye. If you are a member of the Pirate Traders Brigade, head on over to the private stream. I will see you there. If you're not, why the heck don't you join? It's only $20. It's less than 2 ticks on the ES. You can party like a rock star every day with me. Okay. Thanks a lot, guys. We'll see you next week.